Welcome. So Abby from Kled, Miya from Street. Are we calling it Street now? Street Foundation? What are we calling it? Street.
Yeah, just Street.
Street.
I think that's cleaner.
It's much cleaner.
It is.
Yeah. It's the Facebook moment, bro.
Take the foundation away.
You got the handle yet, or what?
Not yet. I applied for it. So.
Okay, congrats. Yeah, it's going to be a competitive one. All right, well, you guys are living at the center of what I think is one of the more interesting conversations that seems to be happening. And I mean, the questions that I've been asking here, which is sort of like, what makes a token valuable? What is sort of the future of tokens? How broadly are these going to be applied? Is the future bringing in these sort of Silicon Valley Web 2 companies into the world, or is it still sort of deep in the weirdness of crypto, or maybe it's just Wall Street, et cetera? And so both of you have been very active, I guess, experimenters, publishers, thinkers around this, and I'm excited to kind of, Andy, I think you have opinions that have not been universally held amongst the guests that we've had on here, which is a great sign for me. So before we jump in, there's probably some folks that don't know exactly what it is you guys do. So let's start there before we get into the nuanced weird shit. Yeah, Abby, what are you up to?
Sure. I own a data marketplace. It happens to have a live token on Solana. It's a basic place where any user can upload their personal data, pictures, images, camera rolls, homework assignments, literally anything. And then we sell that data to large AI labs and data companies that need it, and then we pay out the users for it. So it's a first consumer data marketplace. We just raised at 100M, so we're very proud of that. And we have our biggest update coming out in a couple days. I can't say the exact day, but
you bastard!
You haven't been watching this on the timeline for months.
In a couple of days, I cannot. I mean, it could be tomorrow, it could be the day after. Who knows? Yeah, that's pretty much it.
Can you just put a finer point on the big opportunity you see there, Kled?
Yeah, I mean, the big opportunity is, look, like every large lab across the board needs a high-scale training data, and right now there's not a single player in the market that's tackling just the data aggregation part. Everyone's doing data labeling from record to scale to surge, everyone. And we are the only ones doing large-scale data aggregation with an actual functional app. So if you want to collect data at scale, you need some sort of software that's going to link and bridge the gap there. And we're the only app that does that in the market. So ideally, there's a world where every single person on the planet is filming their daily activities, their lives, of them cooking, of them taking out the trash, and that's training the next generation of robots, and the thousands and thousands of AIs that are going to spawn up. Yeah.
All right, more to get into there, but I want to go over to Miya first. What the hell are you up to, my friend?
Yeah, I think the most productive introduction is kind of giving the backstory of how we came to build Street. So here's the reason for it. I used to have a liquid fund, and that liquid fund was invested in Kled. I was back in shortly after they launched, and Kled and some other belief tokens had like one big issue, and it was that they have a very valuable equity, but their token is not really valuable at all. It's very hard to find any intrinsic value for them. So back then, we somehow tried to find a way to arbitrage the gap between the low token valuation and the very valuable equity valuation. For Kled, for example, it was back then, I think they raised at a 40 million valuation, and their token was like worth 3 million back then. So there was obviously like this kind of arbitrage opportunity, and we somehow
purely from a narrative standpoint.
Yeah, and also from like an intrinsic value standpoint. So we try to find like a framework to somehow include or kind of reference the equity in the token. That was back in June, maybe May. And it's definitely easier said than done. I mean, the moment you go into that sector, it's immediately a security violation, and you get hunted down by the SEC. So it wasn't an easy way, but we came up with this initial framework back then. Was just more an idea, and we pitched it to a lot of launch pads. We pitched it to Ben Pasternak, to Alan from Pump Fun, but nobody really tried to do it. So I had a call with somebody from Paradigm, and I think it was August, and got a really positive feedback from him. And I just decided, hey, if nobody does this right now, and we have this short opportunity window, then it just fades by, and nobody really takes the opportunity. And we managed to build out ERCS with a lot of really experienced security lawyers, and the same. We have the same SEC, same litigation lawyers that represented Ripple in front of the SEC. So a lot of really, really smart people who are working on this now to somehow find a way to have this equity grade ownership without it being a security. And I think we're at a good spot where we're about to approach the SEC and really target regulation and really target that we can go to these Web2 startups and say, hey, this is not a gray area. This is actually working, and you don't have to fear anything from the SEC.
It's a fun world to imagine living in.
Yeah, so much fun.
Very fun.
Okay, so I think that the place where you seem to have a ton of certainty, but I don't think that certainty is universal, is this idea of valuing tokens on a fundamental basis. I think I'm not sure. I think this is clearly a deeply held belief that you have here, rather than just talking your book. And yet we had, even in the conversation just before you, was sort of this, and even yesterday was sort of this idea that, when I ask what makes a token valuable, it's actually, well, that people want to hold it, not necessarily that there's some fundamental value, or that some of the most expensive or most valuable tokens in crypto, you can't actually put a discounted cash flow valuation to, Bitcoin being the number one there. So I'm curious why you were so hell-bent on this model being the only way that tokens are actually valuable.
Yeah, so this belief that you're describing, it works in bull markets, but it doesn't work in longer cycles. And I mean, we've seen this in the last cycles, that as soon as there's like a long period of just of dry liquidity, then these tokens, the ones who really have no intrinsic value to them, they're just going to zero because there's no fundamental reason for people to hold them. So
it's also just laziness, right? Like if you have like a wide spectrum of products, right, and you have no intrinsic value tied to an asset that's meant to purchase, right, and we're always relying on buybacks, and even that, if the intrinsic belief is that like just buy it because everyone has to hold and it's cool narrative, right, like that doesn't make sense. So I think the markets like slowly shift towards fundamentals every single time, right? It always goes back down to buybacks. It always goes back down to the intrinsic value of the token itself. And I think it's really interesting that right now the conversation is always going back to these ownership coins. That's like what everything is like converging into. And the reason for that is because everything's super dry. Bear market's happening right now. Everyone's realizing that the only thing that's actually going to hold value is these like very, very high fundamental coins that are tied to intrinsic value, right?
I mean, but that's not true though. Like it's just not fundamental. Like, I mean, the number, we look at the top 10 tokens that are still holding a ton of value. I mean, obviously down,
let's put it like this. I'm not saying the top 10 tokens. I'm not saying any of the ones that are performing very well. I'm saying, let's say you had a new startup come in and just say like, hey, buy this because it's cool narrative, right? It's not going to work. It's not.
Okay. Like when you conceptualize, I guess, the right type of tokens, or when you're pushing back on token structure, you talk about kind of these dual token like equity structures. Are you talking about like, these networks where the token is a core productive asset to the functioning of the thing? Is that a different bucket?
Well, then it's just a meme coin, right? So like if it's a meme coin, sure, let it be a meme coin. But these startups that came on chain, like all these ICM coins, came with the intention of bringing intrinsic value towards these tokens. Yeah. And right now there's no intrinsic value towards the tokens. And that's the whole point.
I think there's also like two different things to two different sectors. Like obviously there's like Web3 coins, and for these Web3 coins, I totally share the belief that most of them, they shouldn't involve equity. It's kind of impossible even to involve them, because the whole VC world does these equity plus token warrant sale. So after I published this research paper, I spoke with a lot of founders. Some of them have raised from a lot of money from venture funds, and they are minority shareholders now in their own company. So they don't even have equity. So it's not really possible to even involve equity in this token conversation. And I've met one founder, for example, who purchased back all the equity he sold to VCs. Like that's something really cool. But I think he's the only one who would ever dare to do that. So yeah, for Web2 companies and for like this whole ICM thing that people are now getting into, it's kind of impossible to find intrinsic value without involving equity. Like what else do you want to do?
A good way to characterize it is the whole intention of a startup is to end up either exiting or IPOing. It's the two things, acquisition maybe, right? And this end goal is not tied to the direct value of the token, right? If that's the only thing the startup should be focused on, the best thing you can do for token holders is tie that end goal in the best way possible to that value.
But what I find is interesting is I think the sort of the lens of which both of you guys are approaching this from is very much this ICM startup lens. And I think they're, you know, Josh and I maybe come from an era that was prior to ICM that has this sort of idea of networks being valuable and that equity is actually not an effective tool to own networks, or that tokenized ownership of networks could unlock something different. And so I think that's maybe helpful for us as we contextualize this conversation.
Yeah.
And so maybe the question that comes up for me is then why tokens at all?
It's just it's hands down the best place to generate capital for a company. It's not even close. VC is broken. VC sucks. Every VC is usually very flawed in beliefs and values and will kill your company. And VCs deserve no part in your company 90% of the time. They're evil, horrible people across the board. And raising on chain is simply just much, much more efficient, much better for the company. We grew our entire user base off of this one premise of raising on chain, right? Like our entire user base from day one. I mean, you published like a case study on this, right? Like it's not even fathomable. The whole concept of uploading your data and getting paid for it is like the most dystopian concept possible. And we were able to get thousands and thousands of users simply by having this live token out, right? So tokenizing is just better for products, for raising, et cetera. And which is why I think it's the future of financing. But until you bridge this value gap, it is not going to stay the future of financing, and that is the gap that has to be bridged, in my opinion. Yeah.
Well, I do partially agree. I don't think VCs are terrible people.
He's raising right now.
Yeah.
Yes.
Talk to him in a couple months. Talk to him in a couple months.
Yeah, we got to ask him later.
No, I mean, obviously there are bad experiences, but in total, as Street, we shouldn't go against like the traditional venture capital route, and I actually find it's often concerning when founders come to us and their main reason behind tokenizing is raising capital, because then they're incapable of raising normal capital, and they're usually not really talented founders. So there are a couple of more benefits. I would say there's no benefit in being a fully on-chain company. I think it's, as a Web2 startup, being completely on-chain should never
It's
be
dumb. Yeah.
should never.
What does that mean,
considered.
being completely on-chain?
Like I guess these types of ownership structures which give complete control.
So this is shots at MetaDAO then?
No. I think MetaDAO works completely fine for Web3 startups.
Okay.
I think it works completely fine there. I just believe it's going to be difficult to find Web2 founders who will be interested in that. Not saying it's impossible, but I just find
I agree.
it's probably going to be difficult.
Push back to Metaprofit yesterday on that as well, feeling like there's a much smaller pool of people that actually and product categories, et cetera, that go after there. And so there's a much wider world out there. I am curious about this. You know, we're sort of living in this time right now where, I mean, I think the SEC just came out yesterday saying we're going to bring all of our capital markets on chain. It's very bullish. There's sort of the sense that, you know, we're going to get Market Structure Act, that we're going to get some regulations that actually make this clear. And I think the approach that you've taken, and you've done an incredible job of writing and publishing. And so if you haven't dove into what Street's doing, it's very transparent about the approach that's being taken here. But it does feel like a half measure in some way. It feels like a hack, right? And I don't say that pejoratively whatsoever. I think that's actually the biggest gift that crypto has given us here, is that it's just continued to push against the edges and actually force this change through that I think will benefit a lot of people. But I'm curious, as you sort of see more of like a regulatory acceptance of equity stocks on chain, do you see this sort of, I'm going to call it a hack again, not pejoratively, sustaining, or is this actually just sort of like a first mover into that broader world?
So I don't think that security regulations will ever be abandoned. They're here for a good reason, and they shouldn't be completely taken out of the equation. And what we did from the beginning on is that we never structured anything in ERCS in a way where it only works if a certain regulation passes, or if the admin continues to be really friendly. Obviously, now we have a admin where we can kind of build in peace and get like a no action letter much easier. So I don't think that even if, let's say, security regulations are completely abandoned, we can now trade securities on chain without having to KYC, without having to be a accredited investor. Then the question still kind of persists, like, if you are a founder, do you want to bring your whole cap table on chain? Do you just want to bring 1%, 2% on chain? Do you want to give these tokens control? You have to spin up everything yourself now. You have to spin up a foundation, just the whole infrastructure. yourself. And I think even if we come to this, in my opinion, improbable case that security regulations kind of not exist anymore, we'll still have like I think a very strong position that we are able to be kind of the distribution hub and the hub where startups go to truly make this happen the right way or not.
I think my question is more of what happens if we get everything we want from regulations and the Market Structure Act just all of a sudden allows us to IPO on chain much easier. Are you still relevant?
Yeah, I would say so. Yeah, as I said, it's like still gonna be difficult as a founder to decide.
There's still a lot of steps that takes
Yeah.
place to actually do it. Let's say the regulation comes in place. There's going to be like a litany of things that have to be done. And positioning yourself as like the risk taker in the market and the market leader and the only person that's actually doing it the right way is the best and most beneficial thing towards the future that's clearly going to happen.
I like this
That's like
partnership here. I
I'm
think this is good.
yeah, it is. I'm interested in
I
how you
think
guys
that's
are like
the best way to put it,
conceptualizing the startup journey in this world you're building towards. Like, should you launch a token on day one and do all your successive fundraising rounds through a token? Should you launch your token after you have PMF and are kind of ready to scale and ready for the distribution that it brings?
I can't answer that question because I'm going to just give my answer, but
I
my answer is not the same answer as everyone else's.
Well, we want it after.
think
Yeah.
it depends largely. I mean, there are some founders who should probably never tokenize just because either they're the wrong type of startup, like a B2B startup, which has nothing to do with like any consumer oriented thing, and they don't actually need like any attention at all. So I think there are startups which should never tokenize. On the timeline, I wouldn't launch anything if you just have an idea. You also won't launch it on street because we only take founders who already have a built out framework and
Have raised ideally and shit.
yeah, ideally raised. So there are some people who want to do kind of this. You have an idea, you launch a token, and if the token performs well, the idea is good. But I don't know. It feels very risky to just base a investment on just an idea because most of like early stage startups is the founder and not like the idea. The idea can be great if the founder is bad, it still won't do well at all. So yeah, I think you have to build out something, and then you can tokenize from pre-seed to Series A.
I'll give my hot take on it. My hot take is that there's really just there's just so many awful startups out there that get stupid amount of VC funding, and I think one person's really easy to finesse for millions of dollars, aka finessing a VC. If you're a Stanford kid, you can finesse them. I think millions and millions of people are not easy to finesse, and the fact that if you tokenize, it's really easy to go from 0 to 1. Yes, sure, but it's also really easy from 1 to 0 really fast. Means that I think everyone should tokenize, and I think we'll kill a lot of really terrible startups really fast without having investors with a lot of money. That's my hot take. I think
tokenize on day zero.
I think tokenize as fast as physically possible with street in mind, and do it as fast as possible, and kill your startup if it's shit. And if you can handle it, then we'll have a lot better quality of startups that are getting investment instead of investment going toward just completely terrible companies.
That's interesting. Launch tokens early as sort of an argument for better capital efficiency, better innovation.
Yeah.
Interesting. Okay, I'm curious about this sort of transition here because you guys launched on Believe. Then Kled was a Believe token. I mean, I know it was. It was a fun conversation we had the other day.
Yeah.
And now you're sort of, and you've been very involved early on, I think, with sort of Street. I think you're one of the prime examples. So how do you go from this meme coin to a token that's backed by
it's duty, right? It's like your fiduciary duty. If you have 7,000 people that hold an asset, it's my job to make sure that I'm as good of a steward of capital as possible. And I feel morally obligated to make sure that there's intrinsic value within this in as legally compliant a way as possible. So if you're not innovating and you're just compliant in a framework and waiting for someone else to do it, you're just not a good steward of capital. That's it.
Is it a big shift, just like functionally, practically, to make from
completely? Yeah, of course. I mean, you have to completely change the way your token operates, and that's Street's job, right? Like I've been very fortunate to find Miya, who can now do this for me, right? But even before that, we were both brainstorming and trying to figure this out, like way before Street started. And I think it's important that every founder is like actively pushing the limits, whatever direction it is, into innovating in their field to be the best best steward of capital for their holders as possible. It's like the best thing that they can do. Yeah.
Miya, can you tell us more about the legal structure you guys arrived at, and I guess ultimately from a founder perspective, like what are you giving up, or what decisions you have to make to go participate in Street?
Yeah, I can give like a brief overview of the legal structure. So we have we have two different things. Like first of all, there's the startup, and there's this SPV. The startup sends a certain amount of equity to the SPV. That can be 1%, that can be 20%. We usually don't advise anything more than 20. And then they deploy a token. These two things, the SPV and the token, they are never really connected, and that's an important thing. It's not a reference asset which always has the same price as the equity or something, and it's two independent things. The only thing when it really kind of comes together or can come together is in case of a liquidity event, in case of a transaction that can be a merger, acquisition, a IPO, whatever. And in case that happens, obviously since SPV is a regular shareholder in the cap table of the startup, then it gets like a certain amount of proceeds. Now the startup token can direct the proposal making of what happens with the assets inside the SPV. That's a kind of core right this token has. It can just direct the proposal making. It doesn't vote on the actual proposal going through or not. It just directs which proposals can be made. So the simplest proposal is, hey, let's redistribute these assets in that SPV as a loyalty fee reward to holders, and then it gets distributed. Or another example is, hey, let's keep the assets inside the SPV and let's generate value elsewhere. That can be dev grants, yeah, something like that, and just generate value for kind of the IP of the SPV.
This whole concept really demands a diagram. So I would direct people who are trying to follow along there back to some of the docs that you created. Yeah, definitely put a bunch of time into that. Okay, I am really curious about the future you see, Avi. This obviously AI wave is massive. You probably benefited from that in a big way.
Yeah.
You sort of framed it as potentially dystopian. I think I would sort of my initial look at it was like, I just can't imagine that anything that I do, especially at scale, is actually valuable. Like, is my data actually valuable? So I'm curious if you can maybe dive in a little bit into what people get from participating in your network, and like maybe the scale and opportunity that you really see here.
There's like $100 billion of data purchases that happen, and it's not across AI only. We have tasks coming out in our next update that are like, take pictures of potholes in New York City. There's like an active like $5 million contract from like the Department of Transportation that's just like sitting there, that like if you take pictures and you provide those pictures to them, they can go fix these potholes, they'll pay you, right? So users can participate in like millions and millions of these activities across the board that happen every so often.
So it's more productive tasks than like your passive data about
yeah.
what you bought at the grocery
I mean,
store.
look, every company's trying to get into this right now. Uber's getting into data labeling for drivers while they're literally sitting down so they can do special tasks and just like submit like menu items and stuff. They announced this a while ago. We front ran it. We did it first, obviously.
Obviously.
But I think there's thousands of tasks across AI. It's not in the bubble of AI. AI is a good one, obviously. It improves training. I think the rate that you'll see for those AI tasks are actually going to be slightly less, maybe proportionally slightly less than the random special tasks that come apart from like different data companies. A data company came to us yesterday. It said like, if you can track locations of drivers within a building and then map out the building, we'll pay you X million dollars. Data company said like, hey, if you can have 10,000 people take pictures of the last place they ate for dinner, we'll pay you X amount. There's like millions and millions of these tasks that pop up from every company because data is the most valuable asset across the board. That if you give these people, which they currently have no abject way in participating in this environment, the environment to then participate in it, you're creating an entire new job sector. That's the idea, right? So we want everyone to be able to make a living off of just uploading their data. And right now we're seeing a lot of like third world countries already doing that. It's not supported fully as like this fully viable income source in the US yet, at least from the numbers perspective. They're making a couple $1,000s a month sometimes, right? But they're not making like $5,000, $6,000 a month yet. I think with this next update, there's going to be, we're going to shift closer and closer until there's one person that's making like $20,000 a month uploading data for very specific niche tasks that happen to just be like really high contracts, right? And we'll do labeling, upload special tasks, general uploads for personal data, etc. But we're all moving towards this world where there's just me like this human element to this like one AI god that everyone has to feed information to, and the only way you're going to make income is my true belief through uploading your data and filming your day-to-day life. I think that's going to be a big one. Yeah,
dude is deep in it. I have noticed that you made a bunch of announcements recently about acquisition of data sets.
Yeah.
It's unclear to me what you're going at there.
Well, so we don't just do consumer, right? We're a very large player in enterprise, so we've, in order to get some of these larger contracts, you have to. It's an aura game. That's really it's the best way to put it in crypto terms.
What is it?
You have
then?
to, you have to be like, look, I'm the greatest of all time at licensing. I have everything. You want to get something, you go to me. That's like the thing you have to portray and be really good at and actively show off, right? So we've signed a contract with like Authentic Holdings, which is like 140,000 pieces of like all of the most popular TV shows like Tom and Jerry, Looney Tunes, Bugs Bunny. We own all like a ton of episodes from each of these franchises. We also own like some of the biggest catalogs of drone footage. We just signed like 50 million patient medical records and anonymized it for HIPAA. That's from like one of the biggest billing companies in the US. So if you just like, if you're playing Pokemon, just collect everything every single day from even the enterprises, not just the users, you're in the best position to receive all of these contracts from all these large companies.
And do you have demand on the other side of that, or are you sort of front running that?
We have way more supply than demand right now, but that's not saying there's no demand. That's saying we just have way more supply because we're really good at getting supply, right? But we've seen like hundreds of millions of dollars in contracts for the buy side. It's really just about creating software to fulfill all of that because it's unique and niche every single time. When someone asks for general image data, they want raw data. When someone asks for like, I need a location tracking of a driver inside of a facility, that's like custom software you have to build every time. And there's just so many of these tasks that pop up across the board that you're gonna have to build custom software for everything. So it's a very engineering intensive operation. This next update should greatly push us closer to that like large demand side. Yeah.
Teasing an announcement of an announcement will get you kicked off the stage. You've done it twice here today, so walk carefully here.
Like I said, it's a couple days.
Yeah.
And it's not a tease. Yeah.
You have anything else, Josh?
No, I don't think so. I think we're gonna get this robot up here next. So
yeah, I find this whole thing very interesting. I mean, I think it's really interesting to watch you two, just as human beings, sort of show up in the space and really have a strong opinion and a set of principles and run at it. And it's I think an admirable thing that it's definitely attracted my attention to it. And I think I have big open questions, but that's exactly when I want to have big open questions.
Dude, yeah, it's crazy. You're gonna have it sit in the chair.
Do you want to be on here when the robot comes in?
Bro, dude, I don't know. I'm scared of that.
Bring the robot in.
Dude, that's your customer. What are you talking about?
You're right. That is my customer. I'm terrified of this
thing. That.
This is terrifying.
So this is
this is who I'm training right here. God, it needs some work, dude.
Can we get it?
No, stop that.
Does it do high fives?
Can it do high fives? I don't know. We'll do low five. So I watched these things were battling yesterday. I think we saw. We'll get you up here in just 1 second, Matt. I just like to stare at your robot first because this is intriguing to me. They were battling yesterday.
Okay.
I think Dudas and Samani went.
Can I put money on the fights? Do they let me?
I don't know. We'll have to find. You know what? I think we're gonna have to actually kick you off so we can actually find out.
We're gonna have to ask these questions. Yeah.
Gentlemen, really appreciate hanging out. It's been wonderful chatting. Good luck with your token supplies.
Metaplex. This clip brought to you by Metaplex. Launch tokens and NFTs on Solana and the SVM.